So you've learned about the ICT concepts and all of his like fair value gaps, market structure shift and stuff like this, but you still keep losing. And why is that? It's because of one simple thing, and that is liquidity. You don't know where the liquidity is and where the market is going. And the market is always going for liquidity. Now I'm gonna show you just like simple example of what liquidity is and what I basically imagine when I think about it. This is just example trade that might happen to you. You know, you think that this is fair value gap and you enter on it, and then you lose because this is just not the way to trade. So let me show you what is liquidity and how to find the liquidity. So let's imagine we have this chart right here. After we have this move up, we create this liquidity right here. Now the market is here. So market is going after liquidity. So it will go down and take out the liquidity. And the reason why market is going after liquidity is because when you have like billions of dollars and you want to buy billions of stock or anything, you would move the price too much. Like if someone would be buying here and he wanted to go long, the price would just do this. Like it would just jump way too much. So these rich people or smart money, they're waiting for this liquidity because when they buy here, they have so many people that are selling to them. So they don't move the price as much and therefore they get better price and make more money. So that's why the market always moves to the liquidity. And how to know which liquidity is gonna get hit and which liquidity is currently targeted? I think it's pretty simple. You just like look at the chart. You can see where the market is going, which liquidity was left behind. So you can see that we have these two these two liquidity pools right here that were not taken out. Also this one, which was taken out. So after we took these two liquidity pools, I would expect that the price is gonna go up and then maybe pull down a little bit and then take out this liquidity right here. Now, do not expect that this is gonna happen, like that the price is just gonna go straight to the highest one, because there is so much selling pressure here that it's just so hard for the price to get there. So this is what's gonna happen most likely. Now, you want to enter trades in these liquidity pools. And why? Because that's where the smart money is buying or selling. And you want to trade with smart money. It's that simple. So wait for liquidity to be taken out. Then you can wait for the market structure shift that you probably know already about. So market structure shift, fair value gap. And then what do you target? Liquidity. So you enter the trade here, for example, and this is all higher time frame, and then market structure shift is on lower time frame. So you target this liquidity right here. So your stop, or at least first target, would be here, and then you can just write it out and see where the market is just flipping or something. You know, it's up to you then. You can also look for some liquidity that was before, so the market can look like this, you know, and we can see that there is another one. So let's just look at today. Or let's look at these kids that are giving you thumbs up. So why don't you give a thumbs up to this video? I'm gonna also show you the trade I took today and why I took it and all that, you know. So price moved up because it took out this liquidity right here. Now, my first trade of the day was entry on this 5-minute fair value gap. Because my expectation was that this liquidity right here would be broken, but we went actually even lower and we took out this liquidity right here. And then the price went right up. So I was kind of wrong, but also right. And that's fine, you know, you learn from that. So after that, the price went up. And what did it do? We can go to a higher time frame, right? We can see this liquidity right here. Go to lower time frame, to the 1-minute chart. Let's go to the replay mode. Now, you can see right here that the market shifted. It broke through this low. It left this small fair value gap behind. You could have entered on that. Stop loss above. I did not enter on this one because my bias was that we're gonna go even higher. But you see, this is another thing. You need to change your bias, like just like this, you know? So I was long biased here, but then I saw that the price is just not willing to go lower, higher. So price continues lower. My expectation was that it's gonna hit this low right here. But then what happened? It was consolidating right here. And now, those of you that don't understand liquidity, you would probably enter on this fair value gap right here. You would probably target something like whatever. I have no idea what you would target even. Because if you don't know about liquidity, you basically don't even know what to target. And just targeting 10 handlers, 5 handlers is not enough. You need to know the exact target on the price level. So right here, you can again see that this could have been market structure shift. Here is fair value gap, so we would maybe enter long again. Now we would go a little bit higher. But I was not long biased here. And why? Because of very simple thing. We took out this liquidity right here, and we still had this liquidity below. So what did I do? I looked at ES. I looked for divergence. And what did I saw? ES made new high. Well, NQ was just sitting right here. I entered my first short right here when it failed. I was hoping for the price to come back into the fair value gap and then down below, but that did not happen. My original stop loss was here. Now this is another thing why you might be losing money. It's because you are holding for your stop loss to hit. My stop loss was here, but you should close the trade if 2 candles are above. And that's it. Now, if 2 candles are above your fair value gap or anything, your PDRA, close the trade. Do not wait for this to be hit. Now, actually, now that I'm looking at it, I had my stop loss way too low here. I think my stop loss was 10 handles. Yeah. Well, doesn't matter. You know, usually your stop loss should be this high. And you should not wait for it. So I got stopped out here. But I knew it is going down. They are just taking more liquidity above. Because right here, this above is also liquidity now. Because we made this high here. And some people might move their stop losses right here. So we took that out. Right here, I checked the ES. We made new high here. I'm gonna put this to 1 minute. So we made this new high. Let's move this chart. One more. Okay, so new high, but NQ did not make a new high. So on the next candle, I entered short, and then we can see it started just dropping all the way down. Also, all of the trades and more were called live in my group. So if you want to join, you can join now for only $50. The price goes to 150 in a week or less than a week. I'm also trading live the 150K challenge now, so you can follow that. See you in there. Now my first target was this liquidity right here. Second target would be this. I also took profit at just 10 handles because I took the loss, so I wanted to at least secure some profit. And that's something you also need to learn, that securing profit is not missing out on anything. You know, taking profit was never a losing money, or I don't know how to say it. Like you will never lose money by taking profit, by taking partials. You know, just you don't have to hold your whole position for this huge move. You can take profit. It's that simple. Now let's see what the market did after. We're just dropping again. And now I felt like we should go long here. But I realized pretty quickly that we are going for this. And this right here is what's called high resistance liquidity run. And you can see how it's just chopping and chopping and chopping. And it gets there. And right after that, we get a little bit lower. And then, once again, we go high. And this is exactly why you need to know what is liquidity. It's not hard. Just look at the chart. You can see the highs. You can see the lows. You can see the equal highs and equal lows. Like, do you see this area right here? You see that we have 3 equal lows right here. And what happens to those lows? There is so much liquidity. Like, just imagine the number of people that are putting their stop loss right here. Bang! We get right through and take everyone out. And then we go back up again. We take this small liquidity right here. We have some volume imbalance right here. And then down, take out this liquidity. It's just really simple. You just have to look at the chart, do not overcomplicate it, and keep trading and making money. So thank you guys for watching. And see you in the next video. Bye bye.